Hey there, homeowners and future debt busters. Welcome to the channel. If you've ever wanted to wave goodbye to that mortgage bill faster than a speeding bullet, you're in the right place. Today, we're diving deep into the best strategies to pay off your mortgage fast. No more tossing and turning at night wondering when this loan will be over. We've got the tools to help you crush it. Now, before you panic, I'm not going to tell you to sell your firstborn or start dumpster diving for extra cash. We're going to make this journey as smart and financially painless as possible, while still saving you thousands in interest. Trust me, you're going to want to stick around for this one because we're going to go over proven strategies that can shave years off your loan. Plus, at the end of the video, I've got a special tip that can make your mortgage payoff even faster and easier. So hit that like button, subscribe, and let's get started. Before we get into the actual strategies, it's important to understand how your mortgage works. I know, mortgages are like that one relative at Thanksgiving who talks about math and causes everyone to zone out. But hang with me for a sec. Your mortgage is made up of two main components: the principal, the amount you borrowed, and the interest, the price you pay to borrow that money. With most traditional loans, your payments go toward both. But what you might not realize is that, especially in the early years of your mortgage, most of your payment is going toward interest, not principal. It's kind of like buying a cake and only getting the frosting for the first few bites. Not very satisfying, right? So understanding this is key. The longer your loan term, say a 30-year mortgage, the more interest you pay overall. But here's the good news. We can change that. Let's pay down the principal faster and save ourselves a lot of money in the long run. Now let's get to the good stuff. I'm going to share some of the best strategies to pay off your mortgage quickly. Pick the one that works for you, or, spoiler alert, use a combination of them to maximize your mortgage savings. First up, the classic strategy: pay extra towards your principal. This is probably the most straightforward approach. You simply add more to your monthly payment and allocate it directly toward the principal balance of the loan. This reduces the amount you owe, which in turn reduces how much interest you'll pay. Let's say you have a $200,000 mortgage at 4% interest with a 30-year term. Your standard monthly payment might be $955. But if you can add an extra $100 each month, you'll not only reduce the principal faster, but you could potentially pay off your mortgage 5 to 7 years earlier and save thousands in interest. Think of it like paying off a credit card bill faster. It's not a magic trick, just simple math and a little discipline. Kind of like eating veggies. Not as exciting as cake, but it'll keep you healthy, or in this case, financially healthy. Make sure to check with your lender before making extra payments. Some may apply them directly to the principal, while others might just keep them as a prepayment for future installments. Next up, refinancing to a shorter loan term. This is a bit more involved, but if you're looking to pay off your mortgage even faster, this is a powerful tool. Say you've got a 30-year mortgage, but you're ready to pay it off in 15 years instead. You can refinance your mortgage to a shorter term, like 15 or even 10 years. Refinancing means you take out a new loan to replace your current one, but with a shorter term and often a lower interest rate. The advantage of this is you'll pay off your loan much faster. Plus, the interest rate is usually lower on shorter term loans, so you'll save money on interest. However, the downside is that your monthly payment will likely go up. Think of it like upgrading to a faster car. You'll get there quicker, but your gas tank is going to run dry a little faster. So just make sure that the higher payment fits your budget. Alright, here's a sneaky one: making bi-weekly payments instead of monthly payments. This strategy doesn't require you to make larger payments, but it can save you thousands and cut years off your loan. Here's how it works. Instead of making one monthly payment, you split your payment in half and make bi-weekly payments. So instead of paying $1,200 once a month, you pay $600 every 2 weeks. At first, that might sound like nothing, right? But here's the catch. By the end of the year, you've actually made an extra full payment because there are 52 weeks in a year, and you'll have made 26 half payments. Over time, that extra payment will go toward your principal, reducing your balance and saving you a bunch of interest. It's like sneaky little bonus payments that don't feel like a burden because you're breaking them up. It's like getting dessert after eating your veggies. It's a reward, but without the extra calories or interest. Now that we've covered the big strategies, let's talk about some additional tips that can accelerate your mortgage payoff and save you some cash. Have you ever gotten a tax refund, a work bonus, or an unexpected windfall? Instead of blowing that extra cash on a new iPhone or a vacation, put it towards your mortgage. Even if you can only make a few big lump sum payments per year, they can significantly reduce your mortgage balance and the amount of interest you pay overall. Plus, it's a great way to make progress without feeling like you're sacrificing your everyday budget. Okay, hear me out. You don't have to go extreme, but consider cutting a few unnecessary expenses. Maybe you don't need that $15 a day coffee habit or that subscription you never use. Redirecting that money toward your mortgage will help you pay it off faster without drastic changes to your lifestyle. Sure, you'll miss your fancy lattes, but think about the satisfaction of knowing your mortgage is disappearing. And hey, you can always treat yourself to a celebratory coffee when the mortgage is paid off, right? If you have a bit of extra space in your home, consider renting it out. Whether it's a spare room or even a basement suite, turning unused space into rental income can make a big dent in your mortgage payments. You could even rent out your garage or driveway for parking. It's like getting paid for existing real estate without doing much extra work. Rent money for mortgage money sounds like a win-win. So, there you have it, your ultimate guide to paying off your mortgage fast. Whether you choose to make extra principal payments, refinance, or use some of the smaller tips we've covered, you've got the tools to start slashing away at that mortgage. Remember, the goal here is not just to pay off your mortgage, but to save thousands of dollars in interest and gain the freedom that comes with being debt-free. So, which strategy do you think is the best fit for your situation? Drop your thoughts in the comments below. I'd love to hear your take on this. If you found this video helpful, don't forget to like, subscribe, and share it with your friends and family. Help others achieve the same financial freedom you're working towards. Let's spread the knowledge and power of mortgage payoff. You got this. Thanks for watching, and I'll see you in the next video, where we'll talk more about how to manage money, build wealth, and live life on your own terms. Stay financially awesome.